Okay, great. Thank you everyone for joining me, and just trying to get that webcam going there and starting the broadcast. So it looks like we're cooking with gas here. All right. And let me just kind of take a moment here to adjust my screens a little bit. When you do these webinars, there's always several screens to juggle. All right. So yep, this is live and I am real. So, and let me know if you can see me okay, and put your comments and questions there in the chat. Feel free to introduce yourself. I'll give it just another minute here and we'll get going. I know, well, actually, I see quite a few people joining. Every couple seconds, there's more and more people joining, so that's great. Okay, very good. Well, I think oh, I see questions going up already. All good, all good, all good. Thank you very much. Okay, so with that said, we won't keep you waiting, and we're going to go ahead and get started. I'm going to make sure that you're viewing the screen. Yep, you're all set. Okay, so we're going to talk about how we can trade options in a unique way, collecting premium with automation. We're going to use our one-touch responsive trade alerts and demonstrate how that works. We're going to look at option spreads that are automatically generated for us with automation for risk and profit controls. And we're going to look at this for any kind of market condition, whether it's hedging or up or down, bull, bear markets, whatever you want to call it, and also sideways. And then we're going to talk about why and how you can have a personal trading coach working alongside you. So remember, we're speculating, and as we speculate, we're always accepting risk to try to make money. There's always risk when you're trying to profit. So do take a moment and look at that risk disclosure. It is important. The main thing to be aware of is that when you're trading, you should only be using risk capital, and that performance, past performance, is never a guarantee of future results, but we've always heard that, and it is true. And a little bit about altavest. We are a brokerage firm since 1997. That's yours truly there. Some of our colleagues on the S&P 500 trading floor. That's the brokers that would fill all of our orders for us. We've done this for 26 years, traded tens and tens and tens of millions of contracts over those years. So we are a highly regulated brokerage firm in the futures and options industry, and our options operations are audited at least yearly, so that's to your advantage. We're registered with the CFTC and a member of the NFA, and we're located in California. And a little bit about myself. I'm a co-founder of altavest, been doing this about 30 years now. I have my Series 3 license since 1991, and I'm a graduate of the University of Southern California. I have my BS in Business Administration. And I began in mutual funds and annuities with securities with my Series 6 and 63 licenses. So I've done securities, I've done futures, I've done options, done a lot of different things. I also have my Series 65, that's the investment advisor license as well. Okay, so with that said, let's go ahead and jump into the main presentation here. I'm going to shut off the webcam for now. That way there's more room on the screen. Okay, so here's what we don't do. We're not trying to day trade all the chop in individual stocks. We don't have any big arrows that tell you to sell and buy, and we're not looking for any of that type of intraday high velocity type of trading. And why? It's because it's difficult, and there's a less than 1% success rate according to some studies for day trading. Here's a Charles Schwab study, 6-year period of time. The active traders substantially underperformed a simple low-cost index fund. Here's a study out of Taiwan over a 15-year period. Less than 1% of the day traders were consistently beating the market. And then same thing out of Brazil, same kind of result. So really, it's difficult to do. And how about during the pandemic era, that meme era where stocks were only going up? Well, here you go. This is from May of last year, and it says the day trader army had already lost all the money it made in the prior year. The day trader army went broke. And then here's this guy here. I'm not picking on him, but as an example, Wall Street Journal featured him. 25-year-old. He made $1.5 million day trading in the pandemic stock market boom. Then he lost it all. So now he works at a deli in Las Vegas for 14 bucks an hour. So we want to avoid that, folks. We don't want that feast and famine. And it's difficult, though, and we know it's difficult. We've been doing this for years. But why is it difficult? Well, there are three barriers, we think, for trading success. First of all is noise. There's just a lot of information in the landscape. You have the bulls, the bears, the punditry, the talking heads, whatever you want to call them. They're all getting in your ear and getting your attention. And it's very confusing. And this one kind of cracks me up. So here's this guy here says Bitcoin could reach $250,000 next year, or it could plunge 70% to $5,000, according to another analysis. So how on earth is that helpful? It's not really. It's just narrative. Here's Jim Cramer on January 9. This rally won't last. On January 11, the market could rally. Yeah, and I'll pick on Jim Cramer a little bit. Everyone knows his name. Here, First Republic Bank is new focus, very good bank. And then, of course, it promptly crashed. So that's all narrative trading. It's just storybook telling, trying to make yourself feel good, trying to convince yourself that you know something, and so on and so forth. So we're not going to do any of that. And meanwhile, number two, how about time? Do you have time to screen watch? Do you have time to be like this guy here or a gal sitting behind a screen all day, or at least for 6-7 hours a day? This was just something I found, pulled it off the internet here. This person trades full time, sits in front of my computer from the market open until the close, watching positions, and every once in a while, even after market hours. So I don't know, but a lot of us would rather probably be doing this, or maybe more of this, my favorite, after a busy day. So with that said, number three, how about human emotions? We need to master the fear and greed when it comes to money. And you need to control those emotions, as the saying goes. Get off of this roller coaster of emotion, of euphoria and anxiety and dependency and despondency and depression. So remember, markets are always correct and we aren't. So it can be expensive trying to convince the markets that you are right. It's a great quote. And these are three common biases: recency, confirmation, and anchoring bias. And here's this one meme, you've probably seen it used in many ways, but it's not the bull market. You really are a genius. So let's not fall into that trap. That can be the worst thing that could happen if you have a lot of success too easily. And remember, the algo landscape, or the AI or machine-driven technology, they have no emotion and they're dominating the landscape. If you don't realize it, 90% of US equity trading volume is algo trading. So that's your competition. And what about for options trading? How about algos being used for options trading? Yes, we can use algos for options trading. We're going to show you that demo in just a second. We can trade option spreads and sell options just like the professionals do. And this woman here, I saw this last year, and I thought actually she summarized things very well. I think she's a reporter with CNBC. She says here, an option spread is the buying and selling of different contracts, and it's a very common way for investors to hedge risk and volatility. And it's usually cheaper because you can offset your cost by the proceeds from different contracts. And it's been used by Wall Street professionals for decades. And in 2021, 11% of Robinhood's active users made options trades. But of that 11%, fewer than 1% actually made multi-leg options trades. In other words, less than 1% of the 11% were trading option spreads. And those are the strategies that professionals use. So we're going to look at these professional multi-leg option strategies, how to collect premium, and let's look at how an insurance company might trade options. Well, they would get paid the premiums to assume risk, just like they do in their business. They'd sell and manage time. They would insure themselves by hedging. They would be consistent and patient in the process, and they have probabilities and math. They put the favorable long-term odds, put the long-term odds in your favor. And they look at statistics, just math. That's all they're doing. So how about premium collection With option strategies, we're looking at base hits by going short or selling options, collecting premium. We need to be consistent and patient, manage that risk, expecting to have losers along the way, manage reward, not get greedy, of course. And you would want an experienced coach to work with you and alongside you, and you need the correct tools to make this happen. So again, lots of base hits. We're not going for grand slams here. Those are low probability outcomes. So we're going to look at short option strategies for premium collection. We're going to look at targeted outcomes with predetermined risk. These are called credit spreads, where you collect premium. Each position is insured with predetermined risk and reward, and they can even be non-directional, meaning the trade may be profitable if the market moves up, down, or sideways. Now, first, I want to point out why we're going to do this with stock futures index options and not individual stock options. There's three benefits. One, an index is less volatile, of course, compared to an individual stock. You see every few days individual stocks may make headlines by dropping 30, 40, 50% in a day. An index will not do that. And with an index, you have strategies applicable for any direction. So it's easy to use an index to hedge your overall portfolio or be bullish or bearish on an overall index and market direction. And then, of course, you're tracking just one market with an index, not I think there's something like almost 7,000 securities now, stocks and ETFs. So very convenient that way. And then, of course, there's a large margin of error when you're trading the spread. Don't worry about this. I'll show you in a second what it means. But essentially, between these upper levels and lower levels, you have this room for the market to move back and forth with the types of spreads we're going to look at. Now, before we jump in, let's look at a couple of the Greeks in terms of options trading. Delta, it's simply how much does the option value change with a change in the underlying asset. That's all it means. But it's also used as the approximate probability of expiring in the money. So for example, if this delta is 0.25, that means there's a 25% chance it expires in the money, but also a 75% chance that it would expire worthless. Okay, remember also delta is always moving as the price of the option moves and as time passes. And it is not the probability of a winning trade. So that's very important to keep that in mind. And then theta, just the other Greek, it's real simple. There's others, and you can go even deeper, but we don't need to, so don't worry about all the different Greeks. Theta decay is really just time decay. Options are a decaying or wasting asset. They have limited lifespan, and that's referred to as theta. It's a negative number. It equals 1 day of time decay. So again, if your option is at 10 points and the theta is negative 0.05, the next day that premium would drop to 9.95, and the next day after that drops to 9.90, and so on and so forth. And eventually it becomes worthless, as you can see on this graph here. As time goes and approaches time zero, it's going to expire at some point. So you always lose time with options no matter what. Now, a deeper look at these professional multi-leg option strategies. And we're going to look at collecting option premium. So here's what selling a call spread might look like. This red line here, you sell this 45.50 call, you collect 4.5 points, and you simultaneously buy that blue line there, and that's a 45.70 call, and you pay 2.25. But the net result is you collect 2.25 points, or in this case, $112.50 minus your commission. So that's an example of selling a call spread, and you look for the market to stay essentially below this level, this upper boundary here. And then you get to keep that premium. And the put spread is just the opposite. You're selling the put spread below the market, and you hope the market stays basically above that range. And remember, these are not naked options. These are covered positions, so your maximum risk is capped. These are covered spreads. No nakedness allowed here, folks. And we're only doing these covered strategies for a couple big reasons. First of all, that means there's not unlimited risk. You know your maximum risk in advance, and there are no margin calls. And that's a big deal. People sometimes overlook that, because if you're trading with naked options, you're going to end up on margin call at some point, and you're going to have to either add money or you'll be forced out of your position. So the market ends up trading you. And this is probably a good summary of margin calls. Who is margin, and why does she keep calling you? This girlfriend here, or wife, is asking this guy. So you want to avoid that. No margin calls. And the way we do it, you will not have margin calls. Here's an iron condor, just a odd name for a type of spread that we really just kind of looked at in pieces, the put spread and the call spread. So you have a call spread that you sell above the market and a put spread that you sell below the market. You collect premium for doing that, and you look for the market to stay in that range over a period of time, and you end up keeping that premium that you received. Then here is the variation. It's our weird strategy. We've heard that term being used, and we kind of look at that as a compliment. It's called a dragonfly. So this is something we created and invented years ago. It has 6 legs. It's our proprietary strategy. And we're going to jump into the demo in just a second. And it's really a variation on a condor for collecting premium. And I'll walk you through this. I'll slow down here for just a second and walk you through this. And then we'll jump into the live demo. But you sell 4 calls. Hopefully you can all see that. And then you buy 3 further out, and then 1 closer to the money. And then the same structure on the puts. You sell 4 puts, you buy 3, and then you buy 1 closer to the money. And this completely changes the characteristic compared to a condor that we just saw. And I'll show you some trades here in just a second. But you'll also notice, in this case, if you can't see it, that's a 40-10 call that you buy compared to the 40-60 calls that you sell. So you're 50 points closer to the money on the one that you buy here, and the same with this put here. This put that you buy and you own is 50 points closer to the money compared to the 4 that you've sold. So the advantage there is it will gain in value much more quickly than the others that you sold, because the delta is higher, and it will not lose time value. Theta decay won't impact it as rapidly because it's, in this case, 50 points closer to the money. So we'll show you how that works. And we also have other strategies. Here's something we call a bear hedge. Quite simply, you sell an out of the money call spread and you collect the premium. Let's say you collect $100 for doing that, but you simultaneously buy an out of the money put spread and you pay $100. So now you have a trade that you've placed at no cost, and if the market drops, then it has potential to actually make quite a bit of money. Then of course, if it goes the wrong way, then you have to worry about managing the risk on the short call spread, and we'll show you how to do that. Of course, you can do this with what we call a bull hedge as well. But how do you actually create these spreads? Which market do you buy and sell? What strategy do you apply? At what price? In other words, what's your entry timing? How do you manage the risk and the reward? So the answer is Theta Trader. So that's what we're going to review here. Pre-built option spreads, our proprietary algo creates theta trades. We're looking at those pro strategies we talked about, any market condition, and then automation, something called the RTI. That's our automated risk and profit tracker. So we're going to jump into the demo here, folks. So give me just a moment. I'm going to switch screens for you. Okay, looks like we're good. From what I can tell, you're seeing the screen, and we're going to hop over into the Theta Trader dashboard, and this is what you're looking at right now. This is the Theta Trader dashboard, and you'll see this is a demo account I use for these types of presentations. But here are the theta trades in this section, and then you have any open short or sold option spreads, any long or bought option spreads. Then here's your account info. So this is all interconnected with your altavest trading account. So all this information is pulled and integrated with altavest. Obviously, we're the brokerage firm because this is our technology, and any current quotes here. So you'll notice right away there are bullish strategies that are pre-populated, of course, bearish and non-directional. And we're looking at these three particular markets, and I'll show you here what they are by hovering over. You can see these are the E-mini, S&P 500, NASDAQ 100, and Russell 2000. So these are the primary indexes we're going to be working with and the options on those index. And I'll tell you specifically in a little bit as to why, but generally speaking, it's because they're the most liquid instruments you can trade in terms of options, even better than the big tech stocks. So first of all, let's look at what the computer, the man behind the machine, the proprietary algorithm, so to speak, the wizard, right, the Wizard of Oz, but what has the algorithm done today? So it's generated these trades for us that we can select from, kind of like a menu, anywhere from 16 to 67 days till expiration. You can see the computer has chosen different expirations and already pre-selected the strike prices and the pricing for us. And let me point out here what this means. This is your maximum profit potential at expiration. And then this is your targeted annualized return at expiration. But I want to be clear, you can't expect to generate a 222% return by placing this trade. This here, as a number, is meant to compare one trade to another. That's why it exists. And then also your maximum profit potential at expiration. We're always going to suggest you exit a trade prior to expiration and not hold it. And I'll show you why in a little bit, but that's the smart thing to do. But we will go ahead and usually for the purpose of these demos, I'll just randomly pick the one with the most days till expiration. So 67 days till expiration. Okay, here we go. So you'll see this table that gets pulled up. And the first thing I like to do before I dive into these numbers is I'll look at a chart. And that gives me kind of an overhead. Here's the call spread you're selling. Here's the put spread that you're selling. At least the computer's saying this is a reasonable position to look at, I guess is really the way to put it. So that's what it looks like visually. Now let's look at some of the numbers. You'll see 67 days till expiration, settled at 2.5 points. The net premium that you would collect $125 for that one spread, your put risk, your call risk, commission, cash required. Okay, let's look at this. $896 and your profit potential $104. Now, this is your targeted return on cash and then the targeted annualized return. I want to point out something. We will often get the question, so I answer it in advance. You're risking $896 to make a maximum of 104. Why would you do that? Well, let's take a look. The put that we're selling here is a 36.50 strike. That has a delta of 9.7. So that means there's over a 90% probability, according to the math, that this option would expire out of the money. Look at the call. 6.67 delta, so over a 93% probability that this option here would expire out of the money as well. So the math says that these are higher probability outcomes, heavily slanted in your favor if you decide to sell those options and collect the premium and put the money in your pocket. Now, it always defaults to a sell because we're looking to sell this iron condor, and it defaults to a quantity of 1. So we'll run up and maybe we'll do 4 of these. And now that you see the cash required and your profit potential moves up, and we'll leave that pricing at 250, and we'll go ahead and just place the order. And it's that simple. Just assumes you're filled in the demo. So that's how easy it is. The algorithm has basically selected the trade for you, and all you do is choose the quantity you want and place the order. Now I'm going to show you an example of a dragonfly, and let's compare that to the condor. So just a second here. We're going to look at the dragonfly, and this is the June week 2 expiration. we'll point out some of the differences and similarities. Okay, here's the graph. Here's what it looks like. So you'll see here, there's 3 legs in terms of the calls and 3 for the puts. And of course, the condor would only have 2 puts and 2 calls. So you can notice here the structure is a little bit different. The 44.80 call that you're buying is, in this case, 50 points closer to the money here. And the same thing here with the puts. And it's not always 50, so the algorithm will make that decision for us based on a lot of inputs, of course. So again, 67 days till expiration, settlement value 11 1/4, the net premium, that's how much you're collecting, and you'll see your risk and your commissions, cash required, and profit potential. So here's the cash required of $4,521, profit potential of $478.50, targeted return on cash, and targeted annualized return. And if you note that it's less than the equivalent condor, and again, that's because you pay money to own or to buy this call and to buy this put, and that's additional insurance or additional protection or an additional hedge against the short calls and short puts that you've sold. So you have, I guess you could say, a more risk-averse position by owning and buying that additional insurance, that leg. So your profit potential is not going to be as high, but your risk will be lower. And again, it's choosing the strikes for us here. And you can always change it if you want by going up or down, but that kind of defeats the purpose of Theta Trader doing it for you. And you can do a quantity of whatever you'd like, and you can see the numbers changing here. If you do 3 of them, then you need 13,000. If you do 2 of them, you need just over 9,000. We'll collect through 11 1/4 points per spread, or per dragonfly, I should say. And we'll go ahead and place that order. And there you go. It just assumes that we're filled because of the demo account. Now, so that's how easy it is to use the dashboard and just place some trades. Now, let me show you. We have a simulator here. So you can go backwards in time and you can backtest these 6-legged spreads or 4-legged spreads or whatever you want to do. And also, by the way, I'll explain all this color coding in just a second. So what I've done is I've preloaded some trades just to save some time. So here we went backwards. Oh, just a second here. We'll go right here. Well, I thought I would save time, but I didn't. But let me do it. Let me go ahead and load up some trades here. Just a second, folks. Okay, so I'm going to go ahead and you can just see how this kind of works. So here we go. We'll start with a trade from, let's see here. We'll go last year. I thought I had these loaded ahead of time to save some time, but that's okay. You can get to see how the simulator works, hopefully. Now it looks like I'm having a glitch on the internet. Hopefully you can hear me all well. Okay, so here we go. So here is the April end of month iron condor. You can use these buttons down here to go forwards in time. And you'll notice this green is the RTI, the risk thermal indicator. And that's telling you the trade is good. It's green, do nothing. And you'll see here, you can go forward in time, or you can just use the play button, or you can go backwards in time, or of course, you can go all the way to the end at once. And let's just do that to save time. Now, When it turns blue, that means take profits. And you can automate this. So whenever it turns blue and gives you a profit-taking signal, it's captured 76% of the total premium available. And the computer says that's enough based on all the conditions. Close out this position, take your money, take your win, and take your margin and go on to a different trade. And you can automate this, and I'll show you how to do that when it turns blue. But let's remember that was on April 1st with 29 days till expiration. Okay, so let's go ahead and look at a dragonfly in comparison. Maybe it's quicker this way. Yeah, I've got a glitch with a VPN router here. I can see that. So sorry, folks. Let's look at the dragon. And we'll just go right to the end to save time. Now the dragonfly, again, this is the same date, March 1st, and it's the same expiration, April into month. So instead of a condor, let's assume you did a dragonfly. Well, it looks like here you would have had profit-taking signals on March 21st. So that's about 9 days earlier compared to the condor. So sometimes the dragonfly is it's a preferable position to be in because you have a chance to get out of that trade much earlier compared to a condor. In other words, it matures much earlier. You can see it gave you even more more chances here to close out that position. And then let's take a look here at, there's another one here. Let's see here. Let me go back in time. And let's compare the condor with the dragon as well. I don't know why it's doing that, but that's okay. We'll get through it, folks. Yeah, I see I've got a red signal here on my VPN. It's kind of flickering in and out. Give it another second here. Why is it doing that, folks? It's always during the middle of a live presentation. Okay. Here's the end of month January. We're going to look at a condor. And of course, normally it would be loading faster than this. Okay, here we go. We'll just go right to the end. And you see here, here's how a typical loss might occur. You place a condor, a non-directional position, and the market's moving consistently in one direction, and it gets close to your, in this case, upper boundary that you sold, the calls that you sold. And then you get a signal from the risk thermal indicator that says back here on the 17th, January 17, it turns red. And again, you can automate this so that you don't have to screen watch and babysit your position. And this is kind of what a typical loss might look like if you're trading a condor and you get that signal, and of course losses are going to happen. So that occurred here on January 17. So that's the January end of month condor. Now let's check out the dragonfly and compare it. Yeah, I don't know why it's glitching like that, but okay. We'll go right to the end. So now look at this. Remember the condor, it gave us a red signal to take a loss, but had you done on that same day a January end of month dragonfly, had you placed that trade with the condor would end up with a loss, but the dragonfly ended up here actually with 4 profit-taking signals. And again, the structure of the dragonfly, you can see you actually own this call here. And in this case, it's 40 points closer to the money, 32.90 versus 33.30s. So again, totally different risk-reward profile compared to a dragonfly and a condor in certain market conditions. And of course, the disadvantage, I guess you could say that if there is a disadvantage, is that a dragonfly, based on an equivalent condor, is going to have a smaller profit potential. But of course, there are times where that's okay because the risk is mitigated with the dragonfly and having that extra protection. So hopefully that was clear. And here's a bear hedge. So let me go back and show you what that looks like before I jump into the simulator. So here's the bear hedge. You go click on bearish, and I know you can even just do a NASDAQ, for example. And we'll just pick a May end of month bear hedge on the NASDAQ. Yeah, we're getting another intermittent glitch here. Sorry for that, folks, but we'll get through it here. Let's try that refresh again. And then just to point out, and I think I mentioned it earlier, but if you automate the ThetaTrader settings for risk and reward, then you're always going to be out of your position before it expires, whether you hit a profit target or a risk target, whichever occurs first. Yeah, see, I've got a, this happened when they were doing work on the on the cable system in the neighborhood one time. This happened, so I wonder if they're doing that again. But let's try it again here. And we'll look at that bear hedge. Let's try this again. Yeah, see, it's not, give me one more second. Let's see what we get here, because I see I'm back to green. And if it doesn't work, that's okay. You've seen a couple simulations, and that's what I wanted to get through. Yeah, that's okay. It just went red again. But so what we'll do here is I want to show you, or maybe this will work. Let's see if it's preloaded. So here's a simulator on a bear hedge. Let's just kind of run through this. So here's an example where this position actually works quite well, obviously. So you enter the position by selling this call spread out of the money, and you collect the premium, and then you use that premium to buy an out of the money put spread. And you can see here it ends up at a maximum profit because the market settled below your position. Of course, you wouldn't necessarily sit on it the whole time. You'd have plenty of opportunity along the way to close out that position. But that's a great way to have a hedge against a big drawdown and not really put out any money at all. Oftentimes you can do that at a credit. So we like that trade a lot in certain cases. And then here is up above on the menu, we have something here available, proprietary research for all of our clients, something called TradeScope. And here's the one from yesterday. We look at some of the technicals in the market, and then we look at sort of an outlook, an overview, forward-looking guidance here. kind of looking at the CME Fed Watch tool, looking at rate hikes moving forward and that type of thing. And then we also have daily commentary, which is more of a narrative. It's available right here. And here's the one from yesterday. You see all the current quotes, and then you'll see any trades from the day. We had a bunch of positions that we did today actually as well, some bearish positions that we just put on this morning. But you can see here what's happening in Asia, in Europe, economic data, and here's more guidance looking forward, and then economic calendar. So that's all available in ThetaTrader. Now here you go under my account and you go to settings, and this is how you do it. Here's the real trick in terms of automating it. You activate your risk manager by checking that box, and you activate your profit directive, and then you save those settings. And that's all you have to do. And then from that point forward, ThetaTrader is then tracking and monitoring your position for you. And that's all you have to do. And let me go back here and show you. There's video tutorials, there's educational tutorials on video, and then there's a great help file. And let's see if I can click through here to the glossary, and you'll see here that all of the color coding is explained for the RTI, so you can see how that works and more definitions on the spreads and so forth. So you can dig a lot deeper. ThetaTrader provides everything you need, all the tutorials, all the videos, all the training, all the definitions, whatever you need. It's very user-friendly, super easy to use. And I was going to run through another simulation or two just to kind of reiterate what we just saw, but really it was kind of more of the same. So you have an idea of how simple it is, how easy it works, and then you can go back in time, and let's look at our closed positions. So you can filter for all your closed positions based on the date range or the market or what have you, but this is just everything. You can see there's 20 trades on the page, 15 here, winners, 5 losers, your total profit on the page. And again, this is just a demo account. I don't, you saw how I'm placing the trades. I just randomly pick stuff. So, but this is interesting. There are 12 short positions or sold options or spreads, 11 winners and 1 loser. Well, that really makes a lot of sense because we just talked about the higher probability outcomes where you have, according to the delta, over 90% or 93 or 94 or whatever percent probability of the options you're selling expiring out of the money. So it makes a lot of sense that the sold positions here are, 90+% profitable, and the bought positions, basically you're 50-50 on those with a small loss. So that makes a lot of sense, and you can see that any one of these trades, if you want to go back in history, you can just go click on it. You can see now that it's gray, it's highlighted, so you scroll down, and here's an example of what it would look like if you go back in time. This was placed on February 9 with 65 days till expiration. RTI was green, even though you see the trade was slightly red or negative. The computer says do nothing, just let theta decay work. Starts to get green and turn profitable, the P&L. And then more profitable, and then it gets a little negative in yellow, a little elevated risk. Do nothing though. And see that I'm going to pause on that, because if you don't have a systematic quantifiable process and you're doing a trade like this, you're getting down here and now you see the trade, it was making $100, now you're losing $200 or $300. You might panic. You might just pull the plug and sell the low. But the computer says don't do that. And you follow along with ThetaTrader, and then a few days later you get that blue profit taking signal, and then you're out of the trade, and you can see that the blue profit taking signal occurred with 17 days till expiration. So that's a big benefit. You need something like this to help you overcome the human emotion involved, the fear and the greed when it comes to trading. And believe, we all have it. Even after 30 years, it's hard to shake off. So that's just a good example of going backwards in time and looking at your closed positions. You can look at any of your open positions all on one page, or on the dashboard, just like you saw a minute ago. but we're having that glitch here. So there you have it, folks. That is the dashboard for Theta Trader, but I want to show you the best feature of all. And I think you're going to love it. So let me go ahead and switch gears. Give me just a second here, folks. And yeah, keep your comments and questions coming because I will see them and get to them. All right, I'm switching screens again, and it looks like we're back on track. So you've seen the demo, and maybe we can do things a little bit easier with our trade alerts. So these are 1-minute trade alerts, one-touch responsive. You'll receive an alert on your smart device, and you simply touch, accept, or reject, and that's all you have to do. These are all integrated with your trading account. You can do this via email as well. So that's all you have to do. You just touch it. This is a one-of-a-kind trade alert, and here's a short little clip, and you'll see that receive a text message. You'll touch it, and then you'll get a brief description of the trade. You can see it's an iron condor. You can see a picture of the trade with the graph. Obviously, it's a little bit older, but it still looks the same. A few more upgrades, but generally speaking. Now, here's the premium you're collecting in this case, cash required. And look at this. It says you're selling 10 of these October iron condors. It gives you the strike price and the price. But notice it tells you 10. Well, it's customized to you and your account. It's pre-sized for you. So you don't even have to choose quantity. It's already set up for you and your account. Everyone gets a trade order that's unique for them and their account. You'll see here 71 days till expiration in this one, targeted annualized return 63%. And if you like what you see, you just touch accept and the order is placed. So I'll go ahead and replay that. Oh, just a second here, folks. Let me play that again. Okay, just that simple for using the trade alerts. I mean, absolutely, clients completely love these trade alerts. I mean, why wouldn't they? So, I mean, you get the conversation afterwards. Oh yeah, hey Eric, or whatever. Thanks for sending that alert. I was at the supermarket picking up something for my kids, or I was waiting for my kid at soccer practice. I was in a meeting. Get lawyers saying I was in a deposition, and I got your alert. So, airline pilots, and this is no joke. Yeah, I was in the cockpit, getting ready to take off. So this is how convenient we can make it, and people do absolutely love those alerts. So here's how you can get involved with a Theta Trader membership. So you have the Theta Trader software, which is of course everything we just looked at. You have those Theta trades, which are automatically generated with our algorithm. You have the risk thermal indicator, that's the RTI, so automatic risk and profit controls. So simple to set up. And then that trade simulator, you saw us a couple examples there, back testing with those animated charts going backwards and forwards, a value over $3,500 for that software. And then you saw the trade alerts. You saw how simple, convenient, user-friendly that is. One of a kind in the marketplace. I mean, why wouldn't technology allow people to interact with trade alerts these days? I don't know. So again, these alerts are customized and tailored for you and your account, and you'll receive an alert and you just simply touch accept or reject. The value there, over $4,400 on that trade alert functionality. So just to kind of summarize Theta Trader, you have the software and the alerts. So it's all combined. Everything you've seen valued over $8,000. So I just want to make sure I'm clear on what's being offered here. And along with that, you have a private coach. So your membership includes someone who is Series 3 licensed and experienced, been doing this for decades, and they'll have a screen sharing session with you and review, your trade history, review upcoming trades, your portfolio, your allocation, whatever it is that's on your mind, we'll work with you on that. So you have a co-pilot value there, $7,500 or more. I mean, that's way undervalued, folks. I know people are spending $25,000 on, options classes and $50,000 on systems and more. So I've seen it all. I've heard it all. I've even been one of the customers of some of these things, but it's really invaluable to have someone to work alongside you, and someone who's not only been doing it a while, but who's, well, basically has seen a lot. No one's ever seen it all, but we've seen a lot, folks. So again, the software, the alerts, the private coaching valued over $15,500. And then I didn't get into it too deeply, but we talked about our proprietary research, the trade scope and the daily commentary that's valued over $2,900. And again, that's only for us and you. And I mentioned those online tutorials. So we really package everything up that you might need. Although it's very intuitive and user-friendly, you probably don't even need the tutorials. So just to summarize, Theta Trader software, the alerts, the coaching, the research valued over $18,500. And then, of course, that's not what we're going to offer it at. We used to do this in live events, and we'd have a $4,000 price, and to be a member, we have people coming to the back of the room at the table and signing up and so on and so forth. But of course, this is a live webinar, so we like to make a special offer for these live events, so we can even do better than this. 85% discount, and that's a lifetime membership. And with InvestorExpos bringing us all here today, that's one low payment of only $597. So again, I'm going to stress, lifetime membership, one payment, $597. Here is the link to become a Theta Trader member and use all the tools and access everything you've just seen and have a private coach. cf.altavest.com/TT. This does expire Friday evening. And then this is my direct phone number. So in fact, take a screenshot of this or any of the pages really, but you're welcome to call me. People call me all the time, have a few extra questions, and other times people just go right to the form and complete it. But here's the thing, you really don't have an excuse if you think you're just even a little bit on the fence. We'll refund you if you get started and decide, hey, this isn't what I think, or I can't do it right now. We've been doing this for 30 years. We're not interested in holding you hostage to your membership fee. That's not how we operate, folks. So money back guarantee on that membership fee. And this is what it looks like. Just one page right here, cf.altavest.com/TT. One page, submit your order, and that's it. And then you're a member for life with the 30-day guarantee. Now, a few FAQs, tax efficiency. Yes, we can lower your tax rate by over 10% if you're trading in a tax efficient market like futures options. So here's an example. If you're doing individual stocks, in this example here, you have a 12.6% return. In that same example, if you're doing futures options with us, you'd have a 14.64% return, and tax savings of over $2,000, just because you're in a tax efficient landscape. So also no more itemizing each trade. You just get a 1099 with your P&L. So it's a great advantage as well, working with futures options. Always consult your tax attorney, of course. Now, again, I mentioned the E-minis that we trade. Well, they're liquid, they're efficient, and they're cost effective, and they're huge. And what I mean by that is compared to the SPY, the E-mini S&P 500 alone is almost 10 times greater in terms of the average daily dollar volume. And then in terms of the ETFs, it's over 2.5 times greater. So this is really where all the activity is. Like I said, volume, liquidity, and access. Superior execution, the ES offers a cost savings of $4 to $15 per contract and compared to the SPX. And what that means is you have these tight bid offer spreads. So liquidity is important, folks, when you're doing these types of trades. Densely packed strike prices, 100 annual expirations ensure granularity and coverage. So I'm going to make a point here. If you're doing some puts and calls here and some time goes by and the algorithm is seeking a new trade, it's going to find the strike prices that it needs for a set of new trades, like the green puts and calls, and then as time goes by, it'll find some puts and calls here with the blue. So that's why you need that volume and liquidity, provides that granularity. And this is important here. So on Theta Trader, these E-mini spreads that we just did, that's all one trade. So like a Dragonfly, it's one order placed as one trade at one price. So you have 6 spreads or 6 strikes or legs, and you can do that in one order with Theta Trader at one price. If you try to do a Dragonfly with stocks in one order at one price, you cannot do it. It just doesn't work. It's not set up that way. So it's a big, big advantage. You have this really, really unique proprietary strategy available to you in this way. And a couple points about retail stock options. Now, again, these are stock options traders. Most retail investors only have access to basic call and put option strategies. They don't have access to option spreads or other more sophisticated strategies. But as you just saw with Theta Trader, you have immediate access to these sophisticated options strategies. We just reviewed those and did some demos, and so that's available to you right away. And remember, the professionals are not options buyers. If you only buy stock options, then Theta in time is working against you. She says here, the appeal for a lot of retail investors is to buy options because they're much cheaper, but your potential for profit is actually not that high. And of course, what she's referring to there is your probability of outcome there is very, very low. So a couple more advantages here for those E-mini options. Again, you can track just 1 or 2 markets, not thousands. Efficient margin, a clear cost structure. So there's no hidden cost. And I'm going to get into that in just a second. These all trade on the electronic Globex exchange at the CME Group, the largest futures exchange in the world. So every order is treated equally, whether it's for 5 or 500 options. There's no payment for order flow. There's no, quote, free trading. There's just a hidden cost to all those free trades, like, you know, Robinhood advertises, for example, and other brokerage say that they have free trading. That's only in stock options, folks. That's just a gimmick. Even she says here, most popular trading apps generate a lot of revenue from payment for order flow. They can make more money from options than regular stock trading. They have an incentive to lure investors. And what she's talking about is payment for order flow. And what that means is these third-party market makers pay brokers like Robinhood to send their customer trades to them to execute, like Citadel. So how much money does Citadel make on executing your orders? Well, their market making division generated $7.5 billion last year, best year ever. So basically they're taking the spread and taking the little bit of profit out of your pocket every time. And they say there's no commission, but it's actually worse. It's disguised commissions. If you want the broker to work for you, pay a commission. That's according to David Einhorn, fund manager, and he's right. So nothing of value is truly ever free. That sounds like something our grandparents would have told us. That's another good way to look at it. So just to emphasize, there's no payment for order flow nonsense with altavest and what we're doing here. Our rates are competitive, 5 1/4 round turn all in. And some of the big box brokerage firms, here's a screenshot I took here. They say they charge 2 1/4, but that is only per side. That's not round turn. And then they add more fees on top, like clearing and exchange fees, and ends up being more than what we charge. So our rates are definitely competitive. And again, everything is net of all trading cost in ThetaTrader. So all the numbers you saw in ThetaTrader are net. And of course, everyone's self-directed. So everyone has, of course, different performance, just like anyone at any brokerage firm. And what size of account? We recommend a minimum of $25,000. That way you have the ability to diversify among the different strategies. And you want a free membership? Sure, people love this too. 50 to 99.99, you get a 50% rebate, 100% rebate if you have an account of 100,000 or more. So people take us up on that offer all the time. We love that. IRAs, individual, joint, corporate, LLC, trust. And then just to kind of get into some of the questions and maybe more about, like, if you're thinking, well, do I really need something like this, or how can it help me? Well, remember, ThetaTrader is really an alternative asset class, having the ability to maneuver, whether short, long, or non-directional, with these options and these strategies. And maybe that's of a big benefit to you, and your overall investment portfolio could improve diversification, lower your portfolio risk. And risk of what? Sometimes people, well, oh, I guess I'm reading this and that, and this pundit says we're this and that and the other. Well, keep in mind, inflation is always there, folks. That inflation shark is always going after you. Wages don't always keep up with inflation, as we see recently. And this guy here is a billionaire investor, Von Barron, but he's right. He says in long-term inflation is about 4 to 5% a year. It's not 2%, which is what the target is of the Fed. So everything doubles in price every 14 to 15 years. So you really need to make your money work for you. People say, oh, well, the Fed is going to pivot soon. Well, if they do and become dovish, that's actually probably a sign that we're in a really nasty recession or depression even. So that's not going to be great news necessarily. Here we are, the latest CPI, and their target's down here. So we're a long way to go. We're really in a rock and a hard place here, folks. So the Fed pivot, yeah, well, maybe way ahead. I don't know. Recession, every hiking cycle over the last 70 years ends in recession or a financial crisis. And past performance is no guarantee, but something to keep in mind. Today's events are consistent with an imminent U.S. recession. Deutsche Bank fears a U.S. recession is about to start. New York Empire State factory gauge weakened sharply, went to negative 24. Leading economic indicators are suggesting a recession is on the way in the next 12 months. So I'm not going to go too deep into all this, but just to kind of point out, I don't think we can just sit quietly and hope it's all going to just go away and make itself better here somehow. Record credit card debt and record low U.S. savings rates. So that's not good. ISM manufacturing, that was just today, or yesterday, I'm sorry, back down to the post-COVID lows, 5th straight monthly contraction. So you can see here the chart down here and down here for new orders. So we're not going to get too deep into all of it, just kind of letting you know that I'm going to jump into something real quick and kind of wrap it up, and get into some questions. But lowest mortgage demand since 1995, that's an interesting one. But I do want to get to one last thing here, and then I'd love to hear some comments and questions as we get closer to the end. Gosh, even McDonald's is laying off people. They're supposed to be recession proof. How about what OPEC just did with crude oil, cutting production, hoping to drive prices upwards? That's not going to be good for anybody except them. So even Bullard here said some of that might feed into inflation, make our job a little more difficult. So if energy prices continue inflating, then the Fed is more pressured to hike interest rates. So oil prices spiking, China's PMI misses, US manufacturing weakness, stagflationary fears starting to build, central bankers' greatest nemesis. It's kind of a funny little meme here. He says, we have a bank crisis and the economy is entering a recession, but at least oil is lower. And he says, wait a minute, OPEC just did what? So yeah, you never know, folks. And we won't go this. Oh, this is interesting. 7 stocks, or 90% of the S&P 500 in the first quarter, basically represented 9% of the gain. So only 7 stocks represented 90% of the first quarter gains, and that's all your magma, Microsoft, Amazon, Meta, what have you. So Theta Trader allows you that low correlation to what's happening, because you can be bullish, bearish, non-directional. It doesn't really matter. Alternative solutions. So don't be passive. Don't always think you can just buy the dip. You'll end up with your boat for sale. And Leon Cooperman, this is interesting what he says. He thinks we're headed for 7 lean years. The high in the S&P is in for a while. I think he might be right, but keep in mind you want to sidestep any bear markets. This is interesting here. Here's this graph that shows it all. The tech crash, it took another 6 or 7 years to recover, and then after 2008, another 5 or 6 years to recover. And look at this: if you bought the Dow in 1929 at the worst time, took you to 1954 to get back to even. So that's a long time to kind of sit there and wait and be passive, hoping that you just, it's just going to come back sooner than later. Here's another one. If you bought in 1966, in 1982, you're at the same price. So something to keep in mind. The whole point is you really need to be mindful of drawdowns. I mean, it's simple math. You're down 40%. Well, you need to get a 67% return just to get back to your starting point. This is interesting. The single biggest indicator of future market returns is essentially the average investor allocation to equities. So I won't go into reading everything. Don't worry about that. But it says here, the predicted return between now and 2033 is negative 0.2% below inflation based on this indicator. So apparently it's got a very, very historically high significant, confidence of, I think 92% confidence. So something to keep in mind. Even Stanley Druckenmiller, one of the best money managers ever, says we'll be flat for the next decade. And why should we pay attention to him? Well, he had an average annual return of 30% for over 30 years. And I don't even think he had a drawdown. So incredible. So it might feel like, if you're in some of the right stocks now in the last month, yeah, they've been going up for sure. But here's the question: if we're sinking, why are we 200 feet in the air? So you want to avoid that frame of mind where you think maybe, we all need to avoid that frame of mind where maybe you're writing something, it's going well, and we all tend to think we're pretty smart at that time, and don't want to dismiss what's really happening though, which is in this case, the fourth ship is sinking. So we like portfolio 3. So Theta Trader provides you that allocation to alternatives that you really need in your portfolio. So we're going to get here to the end and kind of wrap it up. So again, Theta Trader provides you all market conditions, pre-selected trades, automated trade exits, that one-touch trade alert functionality. People love that. And then the personal coaching, absolutely lean on us over here. That's what we're for. That's what we do. That's what makes us different. Here's what that form looks like. Again, real simple. Go ahead and get yourself signed up if you like what you see, and we'll get you onboarded right away and get those login credentials to you, and we can get you on the way. So 5 simple steps. Just again, complete that form, credentials, get your account open, and start trading with the alerts and all that. So just to wrap it up, so we learned how to collect premium with automation. We looked at the one-touch responsive trade alerts. We've got those pre-built option spreads we talked about. Automation with risk and profit management, that's the RTI. And then of course, you can do any strategy in any direction. That's what Theta Trader does best. And of course, personal trading coach, let's call it that. So here's a screenshot of the software here, and there's the last slide. And yeah, people are asking, yeah, looks like you can hear me okay. Yeah, Altavest is the broker. So we are the company that developed this technology. So it's our technology. It's for our clients, so we'd love to have you on board. You just simply sign up, become a member, and we'll get you started. And let me ask you, so let's see, what are they asking here? Yes, you can automate the positions so that they are closed out for you automatically. So that's what the automation does for you, absolutely. So you have a position in place, and Data Trader will then track it and monitor it for you. And then when it gets a blue profit-taking signal or a red risk management signal, whichever one becomes first, that trade will be closed out for you. And let's take a look here. Yeah, everyone's performance is different, but yes, I understand the question. And altavest is the brokerage firm, so Data Trader is the product of altavest. So you basically become a member with us, and you start your altavest trading account with us. Oh, I've been with altavest for 9 months, up 19,000 so far. Yes, thank you for that one, Ted. I know your name. Yes, and no, it's not just a one-time coaching session. We're here lifetime, so we're available. That's what makes us different. We're real people doing real work. We're not a chat bot. So you can get yourself signed up, get you onboarded, and you have questions along the way, and that's perfectly fine. And we're here to help you and discuss with you and train you and whatever you need. So that's great. Good question though. Sorry I wasn't clear. And let me see if there's anything else. I wonder if I dare risk going back into the simulator. Let's see here. Anyone want to see another trade or anything? Let me take a look if that is working. I don't see it glitching anymore. Wouldn't you know it, as soon as we're getting ready to wrap up, everything starts to work perfectly. I probably have to, reboot the browser, and also probably not the best time to try it again, but that's okay. I think you saw enough within the simulators to understand what we're doing and how it works. And again, you have access to all of that. It's a lot of fun. People have fun using that simulator to go backwards in time. And let's see if there's anything else. Yeah, and someone asked about, I think I know what they're asking, but yeah, Theta Trader only works with the option markets that we just looked at, the E-minis. In addition to, we can and we will occasionally do something with gold or crude oil, but that's very infrequent. So really the bread and butter is with those E-minis. And part of the reason for that is, again, the liquidity and the ease of entry, getting in and out, and the tight spreads. And we are full service in terms of what we can trade, but not, so if you wanted to trade, any other futures contract or something like that, we certainly can do that, but you wouldn't use Theta Trader to do that. Theta Trader is very specific and very unique in its functionality in terms of options trading, especially with these unique spreads, these six-legged spreads that collect premium. But yes, good question. We can do anything in futures. And let's see, let me wrap it up. I think some redundant questions, which is fine. So anything else, folks, or are we good? Let me see here if I can put the link in the chat. Let me see here just a second. I'll go ahead and put that in there. There it is. So yeah, that's good. The link is in the chat there. All you have to do is click on that and it'll take you right to the membership page, or take a screenshot here. And if there's anything else, just trying to think if I missed anything or skipped over anything. I don't think so. But I did want to cover at least this part here, I think it's important to realize that, you know, the benefits here of sidestepping bear markets, and I think that's what Theta Trader can help you a lot. You don't have to just sit tight on your hands and wait and hope. So you may not have a market recover to where it was for decades. We've been a little bit spoiled actually, because I think sometimes in the last, well, especially since 2008, you know, you've had the Federal Reserve ZIRP policy, zero interest rate policy, just pumping money into the economy, and it seemed like the only thing the market could do was go up, except, you know, every once in a while have a you know, choke on a 20%, you know, drawdown, and then you think, oh well, I'm just going to buy it because it's guaranteed to come back up. And yeah, it did work, but that's not going to work forever. I mean, some of these are, you know, you don't want to waste time waiting for the markets to recover. Like this is pretty nasty here, from 1966 to 1982. Wow. So anyway, all right, folks. I'd love to get your feedback afterwards. They do send out a survey. I think I have a survey, but good, bad, or otherwise, love to hear from you. But love to have you with us. People like using Theta Trader, and especially love those alerts. And if you want to do some options trading in a manner that is kind of indicative or representative of how professionals would be trading options and how they're doing it, need to put math and probabilities on your side. So that's how they do it. That's how we do it. This is the tool to make it happen. Very user friendly. It's what you call low velocity trading. It's not going to tie you down to the screen. You're not going to be burdened with babysitting positions, and yet you still have exposure and the risk management and profit management, you know, working for you in the background, all automated. So with that said, yeah, someone says, thanks, good presentation, Eric. Thank you for that. And I think we'll, yes, it is being recorded. But please do reach out to me if you have any comments or questions. And otherwise, I look forward to just going through the new signups here and getting in touch with all of you, and having some of our staff help you along the way as well, getting onboarded, and then we can get you started and get you exposure to a really unique approach to doing this. And you don't have to kind of be stuck with doing the same old thing and just, you know, always trying to buy something low and trying to sell it high. So yes, you can call. You can call the phone number, and I'm still obviously on the phone, but call right now, and it's because someone will pick up, and you can order on the phone. Absolutely. Thank you. Oh, thank you for a good presentation. Thank you for saying so. Someone said they could not get the link. cf.altavest.com/TT. I did try it before we went live. Let me just double check. But yeah, if you do have any problems at all, just certainly call me and we'll get you set up. So appreciate it, and we'll let you go and enjoy the rest of the day. Okay, everyone, we'll talk to you soon. Bye-bye. Oh, I'm just leaving. Someone asked if their internet speed is sufficient to trade. Yes, yes, it is. Again, it's not day trading, so you don't need to have a huge pipe or anything like that. I mean, people are submitting trade alerts from their phones and iPads and emails. So yes, it's no trouble at all. All right, great. I'll let you go. Thanks, everyone.